Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip shows that the yield on the 30-year bond is starting to rise. The president signed the economic growth bill yesterday, stocks rallied, and the coupon curve steepened to 261.7 basis points as the yield on the 2-year note declined while the yield on the 30-year bond rose. The spread between the 30-year and 2-year should widen to my annual resistance at 270.6 after beginning the year at 138.7. This remains a sign of a flight to quality and is an indication that the tightening of the credit markets is still dogging investors. Fannie Mae and interest rate swaps spreads widened as well. The daily chart for the 30-year bond shows the risk that this yield will rise towards its 200-day simple moving average at 4.779, given closes cheaper than or above the 50-day simple moving average at 4.422. It remains my opinion that the good intentions of mortgage rescue plans Hope Now and Project Lifeline will not stop the wave of mortgage delinquencies and foreclosures, particularly with the risk of higher mortgage rates. My second blip continues tracking the topping out patterns for COMEX gold and NYMEX crude oil. Gold remains well below its all-time high of 941.8 set on February 1st. Monthly and quarterly supports are 897.5 and 856.5 with a daily pivot at 911.1 and this week's resistance at 974.1. Crude oil is above my semi-annual and annual pivots at 88.04 and 88.85, and my weekly pivot at 93.87 continues as a strong magnet. My third blip continues my theme that 2008 is a story of weakness in the euro and the British pound relative to the dollar. Today I show the daily chart for the British pound as it trades between my annual support at 1.9217 and my semi-annual resistance at 2.0039. My fourth blip tracks the status of the daily charts for the Dow Industrial Average and Dow Transportation Average. For the industrials, daily and weekly supports are 11,979 and 11,913 with my annual pivot at 12,670 and monthly and weekly resistances and semi-annual resistances at 12,982 and 13,049. Today's focus will be comments by Fed Chief Ben Bernanke at 10 a.m. before a Senate committee. The bear should remain in hibernation, but beware the wide spread between supports and resistances. Longer term, the risk is to my annual support at 10,747. Dow components remain cheap fundamentally, but we have gone from 15 buy-rated names to 13 as strength and higher bond yields drag valuations. For the Dow Transports, I show a daily support at 46.59 with a 200-day simple moving average at 48.65. A close above the 200-day would be our signal that trading ranges will extend to the upside, keeping the bear in hibernation. Remember that Traders Club returns to Right Side Live this afternoon, Thursday, February 14th at 6 p.m. Give your Valentine the gift of gab and join me on the live radio show and chat. Send your comments and questions to support@rightsideadvisors.com. That's today's 4 in 4. Enjoy your day.